Welcome to the FreightWaves Net Zero Carbon Summit. I'm Craig Fuller, the founder and CEO of FreightWaves. Today, we're going to talk a lot about what the future of transportation looks like as we transition to a carbon neutral world. Transportation companies and folks that manage supply chains are actively planning the future of thinking what a post-carbon world looks like. It's an exciting time. It's also one that's going to create tremendous pressure on companies as they try to manage and balance customer expectations and delivery cycles with moving to a net carbon society. It's an exciting time, and we're really excited to be able to provide this information and content for you here today at FreightWaves. With me today is Danny Gomez. Danny is our Managing Director of Financial and Emerging Markets. Danny and I have known each other for a couple of years, working together on launching the freight futures market when he was at Nodal, which is a large financial exchange owned by Deutsche Börse's EEX exchange. Nodal also happens to be one of the world's largest marketplaces for carbon certificates, and Danny, in his relationship in managing Nodal, oversaw the launch of that product and the scaling of that product. So with me today, I'm excited to have Danny, someone who knows the carbon market, who also has been around the trucking industry for the last couple of years working with us on freight futures. Danny, welcome to FreightWaves. First day on the job. We're excited to have you.
Thank you. Thanks for having me.
So Danny, lots of stuff is happening around carbon. It's becoming a really important topic for companies. They're setting ESG goals and making a lot of public statements about their goals to be net carbon neutral within 10, 15, 20, sometimes 30 years. What is it that you're typically seeing companies focus on first in terms of their initiatives?
Craig, I think what you're seeing right now is, there's been a lot of work that's been done over the last probably 10 to 20 years in trying to, organize really all the industries around different protocols and standards and methodologies for measuring, setting metrics and goals around what their ESG standards or what their targets will be over time. And I think what we're seeing now is that because of just recent events, whether it's wildfires in California or just more attention around our carbon footprint as individuals and as companies, as countries. What we're seeing is that a lot of companies are setting standards and adopting some of these frameworks. And, one of the things I think that's really interesting about FreightWaves is that, with, your DNA of providing, or our DNA of providing transportation and information and data analytics to the transportation industry really, perfectly situates the company to be starting this conversation, or at least to broaden the awareness of what are the emissions from the transportation industry. I mean, if we look at it in the US, EPA says that greenhouse gas emissions from the transportation industry is the largest sector. It's 29% in the US, 97% of that comes from CO2, and medium and heavy duty trucks are around 23% of that sector. And so it's really important for the transportation industry to understand what their impact is domestically and globally, as we start to move, as you said, to a net zero world from a carbon emissions perspective. Those are very popular buzzwords these days. And, I think what we can do as a team here is to start to provide some understanding about what that really means, what for these companies that are utilizing transportation services or providing services, what are their current carbon emissions, and start to really just, I think, take a step into making this understanding, making the metrics a little bit more ubiquitous in the space, so that we can start to, I think, collectively look at how we can solve this, right? Like I said, there's people who have been doing this work for some time, and so when you think about how do you mitigate some of your emissions, there's technologies that you can put in place. There's different fuel types that you can use. You can change some operations. There's the ability to go to the market, like a physical market or an exchange to purchase carbon credits to offset some of the activity that you're doing or investing in projects that are trying to offset some of the carbon emissions from industries like transportation. And so, I think there's globally in our industry, there's just a lot of figuring out that's going on right now, right? And so, I think what we're looking to do here in Sonar with providing carbon intelligence, I think that is really just the first step in starting to get people comfortable and understanding what emissions are for the different types of transportation that they're using.
So when we talk about ESG, it stands for environmental, social governance, and it's all about how companies have a bigger responsibility than just making profit. If you sort of look at the last couple of decades, it was all profit centric, and that's ultimately a company's primary goal. But there's a broader set of expectations that companies have in order to be good corporate citizens. Environmental is the first one, and obviously that means carbon. If you're in transportation, it means carbon. But it's interesting because customer demand, whether it's e-commerce or getting products delivered to someone's house faster, or just more robust supply chains in terms of the throughput and the speed at which those products are delivered, it sort of goes counter to that because you have an environmental cost as you ship more often, more frequent, and fewer items based on customer delivery expectations. But you actually end up putting more carbon out to do that. And so there's this push and pull. One of the things that's really interesting is there are ways that companies can actually reduce their footprint and still not sacrifice customer expectations. You touched on one, which is carbon certificate trading. What is this concept of trading certificates?
So, like you said, there's the things that you can do. So let's take an example of converting a fleet to EV, right? That's not something you can do overnight. And in general, net zero, whether it's in the transportation space or in the energy space. And the energy space is a great place to look to as an industry to learn from because they've done a lot in terms of trying to make their generation more renewable. There's things that you can do that will take time, right? In terms of investments in new technologies or new operations. While you are looking to make that switch, there are things that you can do up front. And some of those things, as I said, are one of them is purchasing carbon credits, right? And so you have, right now, there's no U.S. Carbon market or no global carbon price, but these are things that you're hearing about being talked pretty frequently, and that's trying to let carbon price be a dictator and to push industries to be more carbon neutral. But here in the U.S., there's some voluntary programs, and there is some globally recognized initiatives that people can turn to try to offset what their carbon footprint is. And so take, for example, a passenger who's looking to buy an airline ticket may, for some airline companies, have the ability to purchase some sort of carbon credit along with their ticket that will offset the carbon emissions from them using that, taking that flight. And so you can extend that concept into the industry at large, right? And so if you have a fleet that is emitting a certain amount of carbon emissions and you want to reduce that, you can do that, one, by technology or operation improvements, or you can look to offset that by investing in projects that are looking to offset the greenhouse gas emissions from other industries. And so those may be forestation, going in and planting trees, or it could be the case that there is in some of these voluntary markets where some companies are what they call minting credits, and those credits may be available for purchase. And so the activities that they do, whether it's having more environmentally friendly refining processes, or if they are I think a popular one in transportation is charging stations. They can produce carbon credits that then can be used in the marketplace for other firms that are looking to offset their own carbon footprint.
So if companies, and these are professionals or could be farmers or somebody who decides to plant trees, assuming that field is audited and there are firms that go out and provide audits of what they've actually have planted and what they're growing, that enables them to make money by selling those certificates to or credits to companies that are part carbon emitters or polluters is probably the more negative term. And it's interesting because what it does is it lets the market set the price for carbon and effectively gives the ability of someone who emits emissions the ability to operate their business, but someone on the other side of the transaction is planting trees or looking at other initiatives that mitigate carbon. Is that effectively the best way to think of it, Danny?
Yeah, and I think solar is a really good example because it's becoming very common. You know, if you look at some of what they call renewable portfolio standards that some of the states or utilities are putting in place, they're basically saying, look, by a certain date, say 2045, I'm going to be 100% renewable. And you can't do that on your own. And whether it's governmental tax subsidies or state regulations and programs have enabled companies to do is to go out and empower really the development and investment in solar resources. And so there's potentially, we talk about carrot and stick a lot in this conversation. There is a lot to be said about having good carrots in place where it's, tax subsidies for the upfront investment, and then also the ability to monetize those assets, not only from the energy they're producing, but potentially in some of these states, the solar renewable energy credits that they're also producing. And so they can, as every day that solar panel is on and producing power, it's producing power that has a value, but it's also producing a solar rec. And so if you're a utility that has renewable portfolio standards that you need to meet, you can do some of that on your own by developing your own solar or renewable projects. But you could also go out and purchase those renewable credits from firms that are independently operating and own these solar farms, the solar panels. And so extension into transportation. And it's interesting to think that could we create a world or an industry where we incentivize the owners of the fleets and the operators to make these investments potentially through tax credits, and could they then for the life of that asset start to produce some offsets that they could then monetize. That's a far away from where we are today, but it's if we start to look at what we can learn from other industries, it'll be interesting to see what we and as a company and as an industry can do to help move things along in our space, because I think globally it's just been recognized, and it's and a lot of the articles and stats talk about transportation as kind of being the next big place for us to make some pretty significant gains in terms of reducing emissions.
So Danny, I put solar panels outside my house. That's not something that could generate credits. It has to be a large industrial or commercial product. Is that right? Or can homes actually produce credits?
Yeah, I was talking to somebody the other day who, based out of New Jersey, said that every quarter they get the $700 to $800 check for the solar recs that they produce. And so there needs to be a process for getting your installation registered. When I think about the transportation industry and what I've learned with working through FreightWaves is that it's pretty fragmented, right? There's a lot of players in the space, and so I think what's interesting, there's a lot of similarities. Again, learning from the energy space where you have a lot of different asset owners who are producing solar recs, and you need to have a central marketplace for those things to take place. You need to aggregate those. You have many producers and few corporate buyers, and so there is a lot of lessons to be learned from industries that are have done made large gains in terms of respectively in terms of creating more reducing their carbon footprint or their emissions, or I think we can just look to those as places to start to see what the path forward is for transportation.
Now, Danny, you joined us. You worked at a very successful exchange that's now owned by one of the world's largest exchanges globally. But you left this job. You were a part of the startup team. You joined another startup, but not on the first day we were born, but a couple of years into it. Why did you leave a cush job where you got to help run this large North American exchange with the management team there. Why did you come join FreightWaves?
Um, Look, what you guys have been doing has been really exciting. We've been watching it. I've been watching it from day one, from before Sonar was even launched, and you guys have done a really good job and have shown how quickly you can move and adapt to what the industry needs. I think ESG is very similar, or net zero, where it's fast moving. You need to be able to react fast and to respond to a pretty fluid market that's really trying to find level, right? And so that's exciting. And then culturally, personally, ESG initiatives just line up with my values as a person. And so the interesting thing about being with FreightWaves is that it's at the exchange level, you have some pretty mature companies that are coming to you to manage their exposure, whether it's to energy or to environmental risks that they're facing in their business. FreightWaves is really well positioned to help those companies, but also to help to bring more people into the boat. And I think that's really exciting, right? When we can start to help form the language around what does net zero mean, and really start to demystify that term in general, I think is pretty exciting. I feel like Sonar and FreightWaves and what you guys have done in terms of being a trusted source of information and data will help bring that message to market.
Danny, you've worked around the natural gas, even around coal. Hydrocarbons. You're a Texan, Texas A&M. Unfortunately, A&M graduate, which I won't get into. But you've been around the petrochemical and the petroleum byproduct industry, and you're someone who believes in hydrocarbons, that they're a very efficient way to deliver energy. But there's also this sort of negative byproduct, which is it does emit carbon emissions. When you're sort of transitioning from a world where you're in and around the hydrocarbon market and you're moving into this environmental market, there's commonly a perception that you must be a quote unquote tree hugger or a diehard liberal who's trying to change the world, and you want to eliminate gasoline and you want to eliminate diesel. But that's not the reality. The reality is quite different. Can you tell us a little bit about how people in this industry, which typically look at environmental rules as sort of a negative connotation, how should they think about sort of this conversion to a net zero world?
Yeah, I mean, there's a path, right? And people are setting some pretty aggressive standards for themselves in terms of trying to be net zero by 2035, 2040. But that by setting goals out, there's a recognition there that these things are not happening overnight. And when I think about it, Craig, there's there's this sense that everything's going to change overnight, and we're no longer going to be looking to rely on hydrocarbons, or that's just not the case, right? I think the companies that are thriving in this space, that are thought leaders, are already doing a lot of work to try to understand how we continue to evolve and how we continue to be good stewards of the earth, and really think about how we're positioning the generation that comes after us to have a successful lifetime here, and what we can do to set that up. I feel like there's a lot of people who will be pulled along this journey, and there will be some people who will lead it. I think FreightWaves can be part of that leading pack, and really start to, again, form and help educate the market, and really, again, start to, again, like these, I don't know if you want to call them, just the people's, what they assume based off of the headlines that they read, that we can start to help dig in a little deeper than that and provide clarity to what's happening here, and how they can really position their companies to respond to what the changing environment requirements are going to be. Because some of this stuff will feel like top down, right? Whether it's coming from large shipping companies, or potentially even regulation. And so I think we need to be prepared for that. And so it's not that we are trying to force this upon anybody, but it is a reality that is happening, and firms need to be prepared for what that means for their business.
Yeah, whether they like it or not, companies are going to have to deal with it. It may be regulatory pressure, which is always typically the least welcome by industry. They don't want the regulators in there. And then there's the social pressure or market pressure of companies and consumers saying, I'm looking for something that's more carbon efficient. I'm looking to buy from companies that are making those investments to make the world a better place. And even if you don't, this whole idea of climate change, which I won't get into the science behind it. At the end of the day, we all want cleaner air. We all want, I lived in China for a bit. I can tell you the air was so dirty there that you could hardly breathe. And that's what it looks like when you have a market that just doesn't have any regulation. You just get sort of a free-for-all, and it almost becomes stifling. But there is an element where the industry can sort of take the lead on this. And I think if the industry does take the lead, it means that less regulatory pressure will come in. I think at times the regulators themselves overcorrect. They sit there and develop a model of the world, what they want to achieve, and they put really strict regulations that may not be the most conducive for business. Whereas if the industry takes the lead, and I think this is where we can play a responsibility of educating and providing transparency, if the industry takes the lead, then it puts less pressure on the government coming in and enforcing that.
Yeah, I agree with you.
So Danny, when we think about the new carbon intelligence product, which we're going to show later today, the level of transparency that we're bringing to supply chains around their scope 3 emissions is a pretty important piece, but it's also somewhat of a black box, is that oftentimes companies don't know how carbon efficient their supply chains are, or frankly, inefficient they are.
Yeah, so you say black box because, like you said, they personally may not have a good understanding of what their assets are contributing in terms of their carbon footprint. But as I mentioned earlier, there's been a lot of good work done in the space around trying to create frameworks and methodologies. And so I think one of the things that we can do as a company is really start to bring those things or continue to bring those things to the surface, or the ones, highlight the ones that are being, that are leaders in the space and that have high adoption, and use those methodologies to apply to this black box of information at the company level, to give them insights into what the global community sees their carbon emissions on, based off of a collective agreement on how we should be calculating the emissions for the various modes of transportation. And so, I think in carbon intelligence, having this data there is really step one in understanding. And then over time, we'll continue to develop more ways for firms to reduce their emissions. And so I think that's, really exciting. Like you said, why come to FreightWaves? There's a lot of excitement around that. This really is the first step in, I think, a journey for us as a company and for the industry as a whole to continue to push. And I think at the end of the day, we can adapt and be leaders in this space, right? I think there is. You can tell me or say better than I can. What the view is, and kind of the. I think everyone looks at transportation that it's slow to adopt and slow to transform. What I've seen recently through FreightWaves is that they're willing to. It's just finding the right tools and mechanisms in place to really enable firms to meet the challenges that they're facing.
There is a whole new generation of transportation leaders. There's the emergence of freight tech and venture capital putting billions of dollars to work, but there's also the incumbents, whether they're large or small, that are also making investments. Family-owned companies are now passed on to the second or third generation, which looks at the world quite different than their fathers or grandfathers. I am a product of a multi-generational trucking family, so I certainly know how that looks firsthand. And then you've got large corporate enterprises that are evolving their technology and testing everything from drone technology for delivery to, as you mentioned, electric vehicles, which are not charged by are generated are powered by hydrocarbons. They're powered by batteries or hydrogen fuel. But you also have different technologies around optimization and how freight can be routed more efficiently in terms of cost and carbon emissions. And often it's interesting because there is a correlation between cost on a per mile basis in terms of more efficiency. So the more efficient something is in terms of being able to route it, it's often more carbon efficient as well. So these things are actually highly correlated, and there's a lot of net benefit to companies regardless of whether they're making those investments just for carbon. They also get the benefit in terms of profit because of the margin appreciation they get. And so those are things that are really exciting. It is an exciting time in transportation. And I think over the next decade, it's going to be what's happening in mobility. And this is really about not just products moving through supply chains, but people and how they move through society is going to be one of the most transformative decades of our entire lives or in the entire humanity, as we're no longer confined to physical spaces and we're able to sort of see what the world looks like when you open up the skies and you open up the ground, and you have electric vehicles and drones and all this technology coming together. It's going to be a really exciting time. We're certainly happy to be part of the conversation.
Yeah, agreed.
Well, Danny, thanks for coming in. Folks, we'll certainly hear from you and speak to you in the future as we dive into this whole concept of carbon intelligence, which is really knowing your carbon footprint, being able to benchmark it, analyze it, monitor it, and forecast it. It's all about having information available to you so that you can make the right decisions on how to mitigate your carbon footprint and also make your business more efficient and responsive to customer demands. It's an exciting time. We're going to tease or show and demo our carbon intelligence product, the first generation of it, later today. But throughout the day, if you could stay tuned to the Net Zero Carbon Summit here at FreightWaves, we're going to dive into a lot of the different topics that folks are concerned about and thinking about throughout supply chains and throughout transportation as it relates to moving to a net zero carbon world. And remember, moving to a net zero carbon world doesn't mean that customer demands or delivery cycles or expectations will be sacrificed. Through technology and innovation, we will see a world that enables us to move to a net zero carbon world that will be more economical financially and more environmental friendly without sacrificing customer expectations. And all of that is going to be discussed today at the Net Zero Carbon Summit. Stay tuned.